Welcome back, folks. So take a look at this here. That is a balanced price range. And I'm going to showcase a model that's uniquely mine. And this model is Venom. Now, I'm going to do a complete expose on this model in the future. But for now, just suffice it to say that think of it as a venomous predator. Okay. And when it injects its venom, it starts to break down the tissues and the sinew of its victim. Well, it's very potent, and my Venom model is very, very powerful. But I want you to take a look at the absence of first presented fair value gaps here. Okay, and I'm only showing you this as a means of contrast. In 2025, I set out to try to showcase only using the first presented fair value gap. You can see the limit order, the first of two getting filled here. And I wanted to focus on using just first presented fair value gaps and using draws on liquidity that were obvious. New week opening gaps, new day opening gaps, um, opening range, studies, the things I taught pretty much in the 2024 mentorship. But invariably, because some of you in the audience don't really want to learn, apparently, or you're trying to be disruptive, and you're being disruptive to no one. I mean, let's be honest here. Um, but I want to kind of like counsel you because some of you may be just simply misguided. For the folks that are paying attention, if you're trying to adhere to one singular model, okay, that means one particular approach to trading. That one model or approach to trading is not going to be an answer for everything. It's not going to be a panacea, be all end all for every potential price run that occurs in price action on every time frame. So to try to help coach, encourage, inspire the new student that may come to this YouTube channel, or someone that's been, floundering around in trying to find their way with all the content and the compendium of information I've put up on this YouTube channel. I wanted to showcase how just doing one thing won't necessarily result in a trade every single day. That's not the goal. The goal is not to have a trade every single day. Your task as a trader is to focus on one setup, one instrument, one time frame, and control risk impeccably. Now, far too little spoken about those things. You can see it trading down into a buy side imbalance, sell side inefficiency here. Should trade down into it once more and then start running up to my limit order for a first partial. So there's that imbalance I'm looking at here. And price should start to vault higher. But I want you to think about how very critical viewers in the audience, and maybe it's you that I'm speaking to, um, you may feel inclined to suspect that the concepts that I teach aren't profitable, aren't effective, or that this model doesn't work. It just means that you're expecting everything from one tool. And I don't do that. And I created these things. So it's important to understand that while I'm not trying to trade every model and every approach and every execution strategy that I have devised, I'm sticking to one. And I can't tell you how many people have reached back to me and suggested that I continue focusing on something like this because it gives them a sense of calmness because they're unfortunately lulled into thinking because of social media that every day is a trading day for you to expect to make money on, and if you don't, you're somehow falling short, and you're not. The people that think like that or try to promote that idea, I promise you they are not profitable traders. They're hiding majority of the things that they're doing wrong. And this is the transition over to the new day at 6 p.m. Eastern Time. And I think that by having some measure of reality applied to your learning is appropriate. So I transitioned into a 5 minute chart just to keep the chart a little bit more tidy. And I want you to think about how giving yourself permission for your model not to give you a setup. That's hard in the beginning because you think that you missed a move, so therefore that's failure. It's not a failure. There's a lot of price action runs that I don't participate in. Some of them, well, to be honest with you, most of them I see them coming, but I'm not participating in them because I have a specific goal in mind. And there's a partial being taken here. I missed the opportunity of getting out at the high a few candles back, but that's close enough for government work. So I'm thinking to myself at this time that because we're in the Asian session, the market could retrace back down in, and I want to take another partial above that new high. And we're inside of the SIBI to the left around 9 a.m. from the previous day. So I'm under the assumption that I could be wrong. It might not go to my limit order. So I want to at least take something off at the highest candles or thereabouts. You can see where I'm taking partials. They're pretty much in the candles that make the turning points at the highs or thereabouts, as close as I can get it, right? So by having this flexibility that and permission that you granted yourself, that your model is not expected to perform on every price run. It's liberating. It won't feel like mental prison where you're punishing yourself and you're punishing your model for not doing what it's expected to do. You're thinking that that model should perform every facet of trading, buying long, going short, trading the Asian session, trading the London session, trading the silver bullets. It's trading, well, Venom. None of you know Venom, but you're expecting with unrealistic expectations that one unique model that you're trying to employ, simplifying your trading. But are you really simplifying it if you're expecting it to deliver on every facet of trading? Of course not. And it's normal for a new trader or a new student to think this way. So if you've fallen victim to this mindset, and here's me taking 5 contracts off because I believe we're in a position where it's likely to go against me and it could stop me out. And I'm going to fall asleep because I need sleep. So all during this time, I'm not actively watching the price action. I've gone back to bed and I said to myself, if it stops me out, so be it. And if it runs up and hits my limit, so be it. I've taken the lines portion of the move inside of that SIBI to the left around 9 a.m. So I'm content. It doesn't need to go to my limit order because it was a profitable trade. And there's the stop loss getting tripped. Here's the executions. I'll slow the recording down so you can see everything here. And that, my friends, is a dose of venom. Focusing on the bias that I told you yesterday. I'm only interested in going long. I'm not interested in going short. And trading in the direction of the liquidity I was identifying. So I hope you found this insightful and encouraging. And so I'll talk to you next time. Be safe.